in less than 24 hours. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, it's the unforeseen event that changes everything. And starting on Monday, you're going to see the beginning of what will be one of the biggest pain trades in history, which is why we like to look at the technicals, momentum, and machine positioning in the markets every Sunday to help you be a better trader and investor and make more money in the markets than you ever have before. And that's what we're going to start today's show out with, because I've also put in here a number of fantastic trade setups from right off of our reports. So now let's head over to Goldman, where we find out just how bad this pain trade is going to be. As we look at the tactical flow of funds report for January, well, Goldman's saying watch out for fear of missing out. And this is really important because it's been 746 days since the S&P 500 last set an all-time high, going back to January 3rd of 2020. And now we're looking at, in 20 years of tracking flows at Goldman, they've never seen this much macro bearishment at new all-time high in equities, meaning the economic data is indeed slowing down. We're seeing this in the global economy, and yet stocks continue to press to all-time highs and now potentially are looking to break out. And the FOMO issue here is that retail investors are still largely on the sidelines. There's typically euphoria when the red headline comes out later today at the end of the day at 4 p.m. And this brings in the pain trade, which now remains higher for equities as new articles start to hit and investors check their statement this wintry weekend and FOMO behavior starts to kick in. And we've not seen broad-based equity demand. In fact, they've seen quite the opposite. So now you can imagine as we head into next week, there are now two factors going on, as you're going to see the corporate share buybacks. We're going to look at those, and then the potential that retail comes chasing this market higher. And when we look at the all-time highs and the flows going with this, you'll notice that we're not seeing a whole lot of flows in this market, and yet that means equity markets are driving higher. The simple reason, if you're wondering why, is people just don't want to sell. And now the corporate buyback blackout window is starting to reopen. Now on Friday, this is where it began. So Monday, we're going to get the beginning of the initial effect of this. But here's the big part of this as we look to see the blackout window starts at the end of the month with 93% of the market cap of the S&P in blackout until January 29th. But right now, 7% of that's open. Next week, here's the big catalyst. Big tech kicks off earnings, and that's worth $5 billion worth of volume weighted average purchase demand per day. So you take a market that nobody wants to sell, and as soon as those tech companies release their earnings, well, we know they're in position at the top of these market cap weighted indexes. They start buying, watch the market to go higher, and then retail investors, well, they're going to play chase in a big way. And here we can see him looking at January flows. Well, there was nothing, and yet still markets went higher as money market funds see the best start to the year on record. Is this another episode of T-bill and chill? Well, he's thinking there's going to be some movement here as people come out of T-bills, especially as rates fall and start to look at equity prices that are headed higher. Now, are we going to get a big push from the machines? Of course, you know, every Sunday we love to talk about the machine positioning. Well, this is one case, and we've made this for a while, that machines are now maxed out. Of course, that's the great thing about our reports. There's links for description and below for both of them, along with coupon codes for 3 people to get a free month that we showed you how to get in before the machine started buying and setting this market higher. In fact, systematic exposure is near record highs and miles away from any triggers that could lead to selling. Now, at some point, this will happen. And if you're using these charts just without any other information, well, according to Goldman, you're missing the bigger story here. Equity allocations from households, the largest owner of the equity market, still have room to bring money into this market. They pulled money out. Now they're going to watch it break out, and they don't want to miss out. You have to remember, most people buy at the top, not the bottom. Now, I know many of you say, well, look, I'm really good at buying bottoms, and that is great. We teach you how to do that with our reports. But historically speaking, most retail investors buy the most stocks at the top. As far as machine positioning goes, just over this next week, we're looking at $17.5 billion into global equities as net sellers. So we're going to see money coming out of the market on a global basis, just across the board, whether it's in an up tape or a down tape. But notice these are not big moves. Over the next month, flat tape, well, sellers are down 11 billion, global equities, 5 billion of that into the U.S. equity market. Up tape only at 28 billion. Down tape, not likely to happen. We're going to make the case for this unless something hits the news. 253 billion to sell. Now, there will be a point where that matters in a big way, but that day is not today, my friends. So hang on tight. Let's take a look at our own screens here now, because what we've got with the S&P 500, momentum is positive. The RSI came off of overbought territory, pulled back and said, hey, hang tight. This thing's still probably going higher. Well, it's moving back up into overbought territory. The MACD, which a lot of people love to trade, negative across, they got out of the market. And that's why we love our Momentum Timer Pro report, because we take a look at a bunch of these different technical signals and we merge them all together and smooth them out. So that way you're not trading in and out too quickly. And what we can see here, Momentum Timer Pro's 2 daily buy signals. What's important though is the short-term sells weren't enough to tell us to get out, because our machine positioning was still strong here, that there was only 1 day, and that's not enough of a catalyst to trigger a sell signal at all in our book. And because of that, just as I want to show you how you can make money in this market, back on November 3rd, our pair reports between CTA and Momentum Timer Pro signal they buy it open. Now the trade's up 11.3%. And here we can note that our CTA report just pulled back a little bit. This looks at the machine positioning, tells you on the short term, those fast algorithms where they're at, and they backed off a little bit. No surprise. The longer term, where more money is sitting on these fast algorithms, they were max long. And we just picked up one little sell signal on Momentum Timer Pro. Again, all we told you was this isn't the market to sell yet. This is still to stay long. There will be a time to sell, and that's the key thing. Use your stop losses, which is why we raised ours up to 472. Friday's closing at 482. Look, we're making money here. No point in giving it back. You'll see the upside target's got question marks. I'll show you why here in a second. Downside target 466.88. I don't think that's coming into play anytime soon. Let's take a look at charts here, because when you break out, now there's some people like my buddy, you might know him. He's got big blonde hair. He likes to measure things and tell you where things are going. I'll give you this bit of caution. Machines don't care about measuring. They trade momentum. We're in a momentum-based market. Back in the day, people traded signals and measures and all these moves. That day is largely gone. What we're looking for now is how high this market goes before people sell. And right now, the case for the S&P 500 is indeed higher here. The same for QQQ. Momentum is positive. RSI is overbought, but who cares? Markets can stay overbought for long periods of time. MACD's got a positive cross. Momentum Timer Pro, 9 consecutive daily buy signals. We look at the 1 month window, it's maxed out. The 3 month window is maxed out, and it's almost maxed out on the 6 month window, suggesting here that this market can indeed go higher. But this is why I encourage people, keep raising your stop losses, keep raising them. Hold on to your gains as you get them. Don't let them all come unwound. A lot of people worry about, when do I sell? Well, you can either let your stop sell, or when you hit your targets and find something else, you can sell. We had to buy it open back on October 9th. Many thought we were crazy because the market went down shortly thereafter. That trade's up 16.25%. Again, this is all about understanding how the machines are trading this market. We show you how to get in before that. Again, check out the links in the description below. Raising our stop loss level now to 396. Friday's closing at 421. And with these tech companies coming out of their buybacks starting next week, there's really not much of a huge concern unless something hits the economic data that we could see this market move even higher. Of course, upside target remains a question mark. Downside target at 396. The chart here, we'll just look at it really quick, because I've got some setups for you that I want you to see. Again, you get to all-time highs, price just moves up vertical as people chase this higher. Again, how high does it go? Well, until the sellers come back. Let's talk about one big opportunity. That's iShares China, large cap FXI. Now, the reason we've been talking about this on the weekly show is important because in a 3-month window, this thing went up off some massive low levels and went up over 50%. So if you're chasing the equity markets here in the US higher, looking for opportunity, you've got to start looking elsewhere. That's the real key for our reports. We show you things that are beaten up. You make the most money off the lows, not off the highs here. And this is important because you look at our machine positioning, max short on the fast algorithm, max short on the slow algorithm, and we run a historical overlay. So when we tell you it's max short, historically, this is an abnormality. Now, it doesn't mean it can't go lower. Oftentimes it does. It just means look for a reversal on the signals. Again, you can grab a free month if you're one of those 3 lucky people. Links in the description below. Momentum Time Pro, 8 consecutive daily sell signals here. We see a buy minimum on the 1-month window. That's likely to continue, flip to a sell signal on the 3-month window, and the 6-month window very weak on the buy side. So here we are. Wait for the CTA Momentum Time Pro signals. Wait for this to come off the short position, move up to a less of a short cover, and then wait for this to switch to a positive signal. That's where you're looking at here. RSI 33. That's oversold. MACD negative cross. Let's take a look at the chart here because yes, this thing can indeed go lower. The only question is how much before it reverses and makes some people a whole bunch of money. Now you can see down here, the last time it got into this level 3 months later, 50% return on more than that. Actually, as we look down here, you see the MACD way down here in oversold territory. RSI bouncing off oversold territory. At some point, people are going to rotate into this. Maybe it's going to be because China is going to keep buying the ETFs and trying to put a floor under this market. We'll see. But if you want to make money, you got to look for places that are already down and devalued. That's where you make the most money. That's how our subscribers are really benefiting in a big way from our reports, and you can too. Now, we got some other opportunities, but let's talk about the bond market first. Much like the equity market, not much buying here. As you can see, they're only in the case where you see some sell signals come in that you see the bonds start to really dump, and that's not likely to happen next week. And here's something interesting. We talk about the pain trade in U.S. equities. Well, according to this analyst, the pain trade really is. And it doesn't mean it's coming about, but the thing that markets are most ill positioned for is really 10-year rates at 3%. And that's why, because investors have all piled into short-term treasuries. They don't actually think that the long end of the curve can collapse. If it does, that's where your 60-40 portfolio, where you got a mix of stocks and bonds, can really shine here. Here we can see that I chuckle when I say that from Miami. He says, but the point I'm trying to make is one scenario that's not priced into the market and we should pay a little bit more attention to is the potential that the yield curve here is right and that rates are indeed going to fall. If we see this in the bond market in a big way. Now remember, a lot of these machines are just kind of in a dead zone right now. They're not buying, they're not selling. Let's take a look at our screens and look at the chart because the setup here is pretty interesting. Now, TLT, the momentum flipped back negative around 11 days ago, according to Momentum Time Pro report. Now, we started this trade out without using stop losses, and lo and behold, we're still not using them. Now, we're down 2.17%. We've had multiple buys. So this is important to understand that if you're trading and you don't use stop losses, which we strongly encourage you to do, and you find yourself in the wrong position to trade, use the reports to dollar cost average back in, till you get where you want to be. And sure enough, we're doing that with our reports here. RSI is at 41. MACD's got a negative cross. Upside target's a 200-day moving average. Downside, the 100-day. And what are we looking for is a flip in the signals. Now, we're not going to be adding to this position because the long side is still too long. Now, if this came into a short position, I'd be looking to do that. You might want to. If this indeed comes off of the short position and you see a flip in the technicals, you can do that. But we're going to hold on to these positions we've got right now. Because let's take a look at this chart. You see, here's that volume profile line over the last 6 months. This is where most of the buying and selling is. And you can see what looks like a little left shoulder, maybe a little right shoulder forming, and a huge head here. If we zoom out, the bigger picture becomes a lot more obvious. And there is the line to beat, those two green dashed lines. You break out over that. Now you're looking at a move up here to 108, just over 108, and then a break out of that. Well, now you're looking at a massive rally, and this indeed looks like a bottoming pattern, which our reports picked up way down here, so you can take advantage of that. Again, this looks like an opportunity at some point in here to accumulate positions again if you haven't, on a flip of those signals, and then look for a breakout between those two green lines. Probably a much easier trade than the equity markets, but I know everybody loves US equities, but if you've got a diversified portfolio, look at the longer to the curve right now. The position here is looking good. Let's look at some other opportunities. We got gold also now quad top going on in gold. Wow, this isn't crazy. Momentum is negative. RSI is at 50. MACD's got a negative cross. We're seeing momentum slow down here, but everyone's super bullish. They're saying, man, all these gold bulls are coming out and saying that rate cuts are mega bullish. Well, not necessarily. A weakening economy means people can't buy gold. They end up selling it. Upside target is still the all-time highs. Downside target 183.20. We're seeing our machine positioning slowly back off a little bit here. This is something, again, no position. This one's just too hard to trade. If you're looking for an opportunity, I would say put gold on the back burner as a trade. Now, some of you are saying, wait a minute, but I own physical gold. That's fine. We're not saying you shouldn't. We're just saying as a trade, go find other opportunities, because you got 1, 2, 3, 4 tops here, and maybe there'll be a fifth. Maybe this will be a pullback. Many of you are bullish. I get it, but not always are Fed rate cuts bullish for gold. It is not a money printing machine, but that's yet what everybody thinks. All right, let's keep forward here. So about gold miners, I think there's going to be a much bigger opportunity here. I know many of you love to trade the gold miners, but there's a problem, is they move so fast. A lot of people get whiplashed here. Show you this is much easier to trade. Just follow our reports, follow our signals. It works, my friends. All right, let's take a look here. RSI is at 34. Well, that is, of course, oversold territory. MACD's got a negative cross. Keep in mind, just because you see those instances does not mean price can't go down more. It absolutely can. 13 consecutive daily sell signals. We've got no position here. Upside target about $2 higher than close. Downside target right into support. And this is kind of what we really want to see. Look at this max short on the short fast algorithms, moving in towards that direction on the slow algorithm. That's what we want to see. And then look at here, Momentum Timer Pro, a bunch of strings of sell signals. This is a fantastic. It does not say you should buy here. It says you should be watching this as a potential place to buy, because there it is, volume profile over 5 years. Buyers and sellers are right here. And what we're looking for is a dip down into that bottom of the, right around this purple supply zone. How do you know it's a supply zone? Well, look, people bought here. They bought here again. They bought just above it. They bought when it got down there and slightly below them. They bought the last time I got here. And what does that tell you? A supply zone is where buyers are at, and is coming here in an oversold position. This is fantastic. If price comes down here and firms up, you don't even need the reports. You could start chasing this with a small position off of this, and then add even bigger as our signals give you the confirmation and flip. That is what I would put down as one of your potential opportunities, along with the bond market, along with FXI. How about silver here? We have, of course, a trade on this that we initially put on without a stop loss. So here we are, down 5.66%. We've got the stop loss set at $20.42 with Friday's close at $20.67. RSI near oversold territory. MACD negative cross. Now, I told people on the show the last week, if you're looking to trade the metals, forget gold, look at silver. I think the opportunity, if you must trade, of course, not just, I'm not talking about the miners, just the metals. Opportunity is indeed here. Let's take a look at the chart for silver, because I've got more setups I want to show you. Where is silver on our thing here? Let's find it there. Whoops, it's right below gold. That should have been obvious. Here we are in a supply zone. And what is a supply zone? Well, it's where buyers are at. And lo and behold, you see they bought here, bought again, and again. And they came and started to buy before price flipped, and they brought it back, bought some more. Then it came down and they bought again and again and again. And here it is. If this holds and rallies up, there's your much bigger potential in silver than gold. You can see MACD starting to flatten out here as buyers come in. You see momentum on the RSI starting to flatten out. Again, positive signs for opportunities in silver. How about palladium? You like metals? Check this one out. Momentum's negative in a big way. You got 12 consecutive daily sell signals on Momentum Timer Pro, but look at the longer term picture. You've got a sell minimum on the 1 month window, a sell mid on the 3 month, and a sell min on the 6 month window, saying this thing is beaten up. And look at our CDA position, max short. Now, let's take a look at the chart here. This is not suggesting you buy this now, so make sure we're clear about that. But what we're looking for is opportunity, because when you go out to the max weekly, you see a chart like this and you say, wow, at some point this is going to settle down and stop. And maybe it's going to be around 75.75, which is where the most people have ever bought this in the history that this thing's been traded. And if it does, and all that supply gets eaten up after everybody's sold, usually what happens is price rallies. You can see a big move off of these levels in the past, coming out of here down. The last time it got right near 75.75, it took all the way up and doubled in value. So how about that for a potential setup? So again, we love our reports because we show you things that other people aren't looking at. They're chasing the markets going higher when we should be looking at opportunities, things that are deeply sold off. Now, that being one of them with palladium, let's go on and check out what else we've got, because we've got some more for you. How about agriculture fund? This one got on the wrong side of our trade early on. We got a lucky buy on this, but what happens now? We're up 0.2%. Now, see, that's not a big number. No, but at least we're moving in the right direction. RSI is gaining strength here. This is one you could chase higher. MACD's got a positive cross. Upside target, we hit that, moved through it. Now we're at 21.34, and look at the machine positioning. They're moving up. We're seeing a switch in momentum, exactly what you want to see to make a potential trade here. And let's go take a look at DBA. There is just so much to see, because look, oh, this is beautiful. You can just see this. We'll zoom in. It's coming down right into support, as we told you. Why is it support? Because where buyers were at before, and buyers came in and are sending price up. Target now somewhere right around a 200-day moving average, puts in a nice little trade here on ags. How about we continue on? What do we have? Soybeans next. This is going to be a big one. Look at this, machine positioning, max short. How about 34 consecutive daily sell signals on Momentum Timer Pro? This is gold. A max sell signal on the 1 month, a sell signal on the 3 month, and the 6 month. This is going to be potentially amazing when the signal flips. Let's take a look at soybeans here. Again, you see the power of our reports showing you where opportunities are at. Here's really an important chart. You see it's in support now, trying to find that. It may drop down even more, but zoom out here. Historically, we can see over 5 years, this has been a strong area of support. So if soybeans continue to sell off, that'll push some downward pressure on DBA, but you have a potential either breakdown in soybeans or a rebound set up at some point. People are going to be looking at this trade saying, look, this thing's massively oversold. Big opportunity in soybeans. And of course, we like to wrap up with the dollar. This is rallying a little bit here, but not too much. 12 consecutive daily buy signals. Machines are back near, well, max long. And yet, what do we see with the price on UUP? It really didn't get anywhere much. And so now we're saying at the 1 month or 1 year volume profile, suggesting that is the point, my friends, where most of the buyers and most of the sellers are at. The dollar's days are numbered as we head into the next FOMC press conference here at the end of the month, where we know they're still going to be talking about rate cuts at the end of the year. Market thinks it's bearish for the dollar, so keep that in mind. And as always, thanks for watching. I'm Steve Van Metre. Thanks for being fans. Bye now.